Tesla smashed earnings and I needed a whole day to digest what the heck is happening with Tesla stock. My name's Henry, and if you're new, welcome back to the channel. I'm happy to see everyone today, and I hope you guys are doing really well. Smash the like button, and I got a stupid rich shirt made for me by an awesome subscriber, and I am so thankful for the shirt. It is so awesome. It says stupid rich on the front, and on the back, it says invest with Henry. I'm in love with this shirt. If I made this shirt at cost and made zero profit for our whole YouTube family to eventually bump into each other and give each other like fist bumps on the street, be like, yo, invest with Henry. Yo, what's up, dude? You got Tesla or you got Neo? Either way, you making that money. What do you guys think? Anyways, in this video, I'm going to give you guys my price target for Tesla, whether we should be buying, whether we should be selling, and what to expect in the coming weeks. I'm going to go over the investor deck and point out what the key numbers are and what is important to focus on going forward, because a whole lot of stuff happened and Elon Musk definitely did deliver on results. Here we go. Right off the bat, we can see right here that Tesla increased their cash flow in Q3 by $5.9 billion to $14.5 billion. The free cash flow was $1.4 billion, which is growing steadily for a company that spent $2.4 billion on new production capacity, service centers, supercharging locations, and other capital investments. I mean, this company is spending all the money it possibly can on aggressively growing the business, and it's still pulling in massive profits. That should tell you guys something about the profitability of this business down the road. What really stood out to me, especially because I just made a video on profit margin for Neo, is automotive gross margin. I was saying how Tesla had a healthy 25.5%, but hold up, the gross margin just continues to grow and is now right here, 27.7%. I'm gonna highlight that. That's basically what Tesla pulls in from its car revenues and what it actually pulls in after they have spent the expenses of making the actual vehicle itself. That means for a $50,000 car, Tesla is bringing in about $13,500 worth of profit per vehicle. For a company like Ford, I was just super curious, and I had it in my mind that I had to Google what their profit was. And because I just knew that it was going to be something really puny and small, because I remember reading that somewhere, and I did the research. It was $1,100 per $22,000 vehicle, or about 5% gross profit margin. That's the difference in so many factors that Tesla has, like marketing, cost advantages, and a superior vehicle that is adored by the market. Tesla as a company is profiting 9.2% here, which is understandably lower than 27.7% because Tesla includes additional expenses into that bottom line number that they incur that is not directly related to their vehicle sales, like depreciation and SG&A expenses. Looking at the automotive gross margin, I see this number having the opportunity to at least rise to maybe 30%, that's what Elon Musk said, or maybe if things go really well, 1/3, which is about 33.3%, as Tesla reaches mass market scale, because that's only going to continue helping their gross margins out. That's because the battery technology is on an exponentially decreasing cost curve, and manufacturing continues to keep advancing, so the batteries are not only getting better in terms of how much energy they're going to be storing, but they also continue to get cheaper. This will either help Tesla lower their vehicle costs and sell more because the price is right, or they will just pull in that fatter profits into their profit margins. Either way, that's good for the company long term and for their stock. Taking a look at Neo, they are doing battery swapping as I discussed in the last video, which is good in China, but Elon is sticking to his plan of just improving the battery infinitely, which I think is a smart idea for the US market, but it also might be smart for the Chinese market since Neo is already doing the battery swapping. See, on Battery Day, Tesla announced they are releasing a $25,000 vehicle. That can only happen, by the way, guys, if gross margin is high enough to make sense for Tesla to do that. Obviously, Tesla can reduce some costs by putting in less features and sacrificing a little quality on the inside of the vehicle or on the outside of the vehicle. But now that I think about it, if they sacrifice outside of the vehicle, that's going to be a less safe car. So the path to least resistance is improving that battery technology. If battery technology continues to advance, the gross profit will get better, and a $25,000 vehicle could have about 20% gross margin, but that would be totally okay. Notice, I think it's going to be totally okay, and it is going to drag Tesla's gross margin lower overall, but it doesn't matter because the sheer volume will be so big, similar to like a grocery store model. What I mean by a grocery store model is a grocery store has like 5% margins, like, like a Walmart, but they have so much sales, which Walmart has a ton of sales, to be exact, $524 billion in 2020. It actually translates to over $25 billion in overall profits. Imagine Tesla going from $1.4 billion in free cash flow to $25 billion in free cash flow. That would be a massive change. You can see on this chart, the current price to free cash flow is about 400 or almost at 400. If, say, in a few years that comes down to 50, which would be a very hard fall, and Tesla pulls in $25 billion, similar to the Walmart example that I just gave, that's going to be a market cap of 25 times 50. That's going to be $1.25 trillion, or about triple in current price. So about $433 times 3. Let's just slap on a $1,200 per share price target. Of course, there's some risks involved. So 1,000 per share could be in the next 12 to 24 months if Elon and the Tesla team execute very well on their strategies. Now, what's really important aside from free cash flow and going to drive the stock way higher is the raw revenue growth itself. Total revenue grew 39% year over year in Q3. And that's not as high as I actually thought, because Elon said that he expects about 40% growth. That's mainly due to the vehicle average selling price declining. It's declined slightly compared to the same period last year, as the product mix actually shifted from the Model S and the Model X to the more affordable Model 3 and the Model Y, which I guess makes a lot of sense. So ASP, or average selling price, is going to continue trending lower as the mass market adopts vehicles that are cheaper, such as the Model 3, and eventually when they roll out the $25,000 vehicle. Now, the most exciting, or at least what I am looking forward to the most, is full self-driving. They released a limited number of early access programs to users. That means they get to start collecting more data, and full self-driving is closer to being available to all Tesla customers. We probably all knew this, or at least now we do, but you can improve the vehicle 0 to 60 performance by paying an extra $2,000 software update fee. I mean, that's pretty much free money for Tesla. That's how full self-driving will probably go. A Tesla owner will be so curious and he'll be like, oh, I really want this feature in my car. And it's just a click of a button away. That's really going to be tempting a lot of the Tesla customers. I mean, it's literally one button. That button does cost $10,000, but honestly, if and when I get a Tesla in the next year or so, I could totally see myself clicking that one button because it makes your car faster, and $10,000 for more fun, worth it. And to wrap up this video, let's just discuss vehicle capacity. Fremont can produce 500,000 vehicles, and Shanghai is going to be on track for 1 million vehicles in production per year in the near future. Let's just say NIO is going to have a lot of competition, and I really do think Tesla will be killing it in China because the Chinese consumer views American goods as luxury products. Tesla is currently $431 per share, and who knows what will actually happen in the short term. I mean, you can watch any channel you like or be a part of any chat group, but nobody can accurately predict Tesla's short term. But as the next quarters progress, I really do think that they're going to be trending upwards. I mean, I find it hard to believe that investors won't continue buying up the stock and having it inch up higher, because Tesla just makes so much sense. Now they're bringing in 27.7 gross margin and 9.2% on a company-wide level, which is pretty dang good for a growing company. That's why I'm holding so many shares, because I really do believe in Tesla's mission, and I think Elon Musk and his team are really going to execute well, especially in the following quarters and when they finally launch the $25,000 vehicle. I'm actually surprised Tesla stock didn't go up more, because the positive quarter results were just so good. But I guess there was a lot of baked-in expectations for Tesla already doing well. But I can see them totally continue to bring in profit quarter after quarter. I don't really see them having any more quarters where they're negative on free cash flow or negative on EPS anymore. That being said, I hope you guys enjoyed this video. Smash the like button for the YouTube algorithm and join with the subscribe button below. I'm so excited to make more videos, and let's get to 50,000 subscribers. I do love you guys so much. I'm so happy that I'm here teaching you guys and being a part of this Tesla journey together and this investing journey with you. I'll see you back here very soon with another video on Tesla or another video on investing. Be aggressive in learning, but be safe in investing. I'll see you back soon, you champions.